Greetings, ladies and gentlemen. I'm Elena Gomez, and welcome to this week's edition of Neobanking Newsbeat, your concise news bulletin on the latest happenings in the neobanking world. Stay tuned as we bring you the latest updates from around the world. Standard Chartered is introducing online and in-store buy now, pay later (BNPL) options for credit card holders in the Asia-Pacific region. The bank is utilizing Visa's installment solution to offer multiple interest-free BNPL choices at checkout, starting in Malaysia and expanding to Singapore early next year. Manoj Piplani, Global Head of Personal Banking, Credit Cards, and Personal Loans at Standard Chartered, emphasizes the strategic partnership's simplicity, convenience, and security, providing customers control over installment payments for enhanced retail experiences. Central Bank of Nigeria's new directive to freeze bank accounts without bank verification number (BVN) and national identity number (NIN) raises concerns among users of neobanks like Opay, Carbon, Kuda, and Pompey. The directive, effective from next year, requires BVN and NIN for accounts, impacting neobanks that typically open accounts with phone numbers only. The central bank aims to eradicate first-tier accounts by April 2024 to curb illicit transactions. Neobank users fear operational challenges and potential account abandonment. Earlier KYC issues affected traditional and digital bank transactions, prompting concerns about the ease of fund transfers. Bengaluru-based neobank Digivriddhi Technologies, DGV, secures $6 million in series of funding led by Omidyar Network India, with participation from existing investors Omnivore and InfoEdge Ventures. Founded in 2019, DGV, focused on dairy, will utilize the funds to expand in Karnataka, Andhra Pradesh, Telangana, Madhya Pradesh, and Maharashtra, investing in tech innovation and portfolio growth. DGV provides dairy farmers and micro-enterprises access to institutional credit, digital payments, banking services, and insurance. CEO Raghavan Venkatesan highlights the $70 to $80 billion opportunity in India's livestock management industry and DGV's role in addressing gaps through embedded financing options like DGV Connect. Buy now, pay later (BNPL), startup Zest Money is shutting down, laying off 150 employees due to regulatory uncertainty and failed business revival efforts. The decision follows the founders stepping down, leaving the company in the hands of investors and new management. Zest Money, founded in 2016, had 17 million customers, facilitated 400 Indian rupees crore/month loan dispersals, and partnered with 27 lenders and 10,000 online brands. The turnaround plan, Zest Money 2.0, couldn't materialize. The Reserve Bank of India's restrictions on non-bank institutions contributed to the challenges faced by BNPL services. The company promises 2-month severance pay and outplacement support for affected employees. Klarna, the buy now pay later giant, has chosen Adyen as its global acquiring partner to handle card-based payments, serving as an acquiring bank for Klarna's consumer offerings in Europe, North America, and Asia from 2024. The partnership aims to streamline card payments for Klarna's 150 million consumers and 500,000 global retail partners. Adyen has been providing Klarna's payment methods for over a decade. Klarna's recent launch of a Visa credit card in the UK and the US aligns with its existing Pay in 30 and Pay in 4 services. And that wraps up this week's edition of Neobanking Newsbeat. Thank you for joining us. We'll be back next week with more news and insights. This is Elena Gomez signing off. Have a great week ahead.